As we speak right now, Western Alliance shares paring their original losses, down 17% earlier in the session, now only down about 9%, again, stopping from being halted for volatility. Put the numbers into context for us here.
Yeah, the signs of volatility you're seeing here is a sign of what's to come while we watch the regional banks really come out with these deposit numbers. It's good that this is coming early because Western Alliance had some clients that folks were worried about, as you see by the share price movement. So $47.6 billion in deposits. The drop represents about 11% of where it was at the end of last year. Now, that is a better drop than what you've seen at some of the rivals. For example, PacWest had posted a number that was a lot more steep, but they had also given you reasons to know that they have been shoring up liquidity here and really taking care of their capital positioning ahead of any future issues. Now, there's another really good sign here for Western Alliance that the market is reacting to, and that is this idea that the deposit balance is stabilized. Actually, since March 20th, after the initial Signature Bank, Silicon Valley Bank worries here, you actually saw deposit balances grow by $900 million into quarter end. And more than that, Kriti, most importantly, is that they increased an additional $1.2 billion into April 4th, so after the quarter closed. So that shows you not only that things have stabilized a bit here, but actually have gotten a little better for a firm like Western Alliance. The hope is that that will carry on onto other regionals as well.
Well, I'm glad that you mentioned the other regionals as well, because there is that contagion effect, especially as we're seeing a lot of earnings come out shortly in, I want to say, the next couple of days as well, next week, right?
Next week, yeah.
But put this into context about how much of this is a Western Alliance story as opposed to really every regional bank having to prove, look, we're okay with deposits.
You're looking at every regional bank one by one. You're looking at the base of depositors here and the concentration risk tied to those depositors and who they are, but you're also looking at their loan books, which are a much more complicated story because it's not like they have to sell all of those held to maturity bonds in a rush, right?
Right.
And also rates, the movement in rates have made the positioning easier for some of these banks as well, particularly Western Alliance. But then there's some other firms, and Bloomberg Intelligence has done great work on this, that are exposed on their loan books to more complicated areas in society right now. Commercial real estate, firms like Zion's, Bank of the Ozarks. Those are ones people will be watching to see what they say about the health of their loan books as well.